TradeNBI.com. This is John's reports for the 28th. Well, you can see I moved the little line up here just simply because I wanted to show that we're still at that same 4,008 brief break above it, unable to really sustain much as we see nice climb in the white NBI. Once we get over that 9 and you see that weakness from the magenta, it's not accelerated because we haven't dipped below the 33, but should we dip below the 33, it will definitely accelerate that rising orange. However, sort of getting to a peak level there unless we're going to get a spike over the 13, but definitely in the weaker category from that standpoint. However, the rising shakeout has kept it from being anything worse. And what we're just seeing is just a bunch of mixed data. No one's really confident as to whether or not you've avoided a recession, still in the recession. The recession is modest. We do know that the toll, though, from economic standpoint to the lower half has certainly been significant. To the upper end, they're just using up a lot of that excess cash that was created with all of the free money that was floating around. So that still has to work its way through the system. I know a lot of people expected things to decay super quickly, but as I pointed out months ago, there was a lot of free liquidity that was still left that has to be absorbed. And that's literally what happens with the higher energy prices. You really have just sucked that out. Now that those are starting to ease, though, as I said, if you start to see oil move into those lower ranges in the, 50s and 60 range, you could see a definite stabilization and it's heading in the right direction. Speaking of which, there it is, oil breaking down into the new lows as of this morning, and it's getting closer to there. Of course, the administration, adjusting from their 80 level, has said in the 70 level they will start to buy to fill up the strategic reserve that they plummeted. Will that be the ceiling? Hopefully not, because if it is, that's still too elevated for really sustained growth. And this weakness prompting the euro buy back a little bit because the lack of need of dollars, as we've talked about for energy purposes, definitely supports euro growth. No shock in that one. And treasuries continuing to move lower yields simply because they believed perception that the Fed will go into a softer mode now that things appear to have calmed down. And that's possible, they may, or positing the alternative theory, they're going to just continue course modestly, not as aggressive, and normalize rates to what they were pre 2008. It's hard for some people to think back that far. And from a gold standpoint, still holding on, which means that the perception that while things are going to reach some sort of a deflationary status, numbers so far for holidays and that are not looking atrocious. So that all bodes well from a market view. Of course, like I pointed out, looking at total sales numbers not really as effective when you're talking about the inflation adjusted numbers. Um, Really, it's about the size of growth, and then replacement costs obviously are going to be substantial for all these companies selling. The question really was, are the discounts deep? And they don't appear to be. Uh, Bitcoin still suffering. I mean, this is that lingering legacy from the FTX, and I think it's going to last for a while longer until things are clarified and sorted out. You're going to see the same thing here in ETH. Bit of a lack of enthusiasm until people know. And this is what I get, the 50K chart. And even my 5K is still not up because the trade station just goes in and out, and it takes quite a while for them to promulgate. If I get the 50 and 5K up prior to market, I'll go ahead and do another additional report and show you those charts and what we're seeing, because we're still seeing some really decent moves intraday, even if it's a bit sloppy in general. Uh, no complaints so far as what we're seeing, given the fact that we've been literally just trading sideways for last couple of weeks after the CPI blowout move, because that happened, as I pointed out, it really wasn't an indication that things are all that great, merely that there was just a situational pause in where things were going. And until that's resolved, at least from a clarity standpoint, we just don't have those answers as of yet. So once I get it and chart up, I'll let you know. As always, though, trade well, and you can look for indicator renewals for December to be coming out. We'll talk again later.